Welcome to the deep dive. Today we're digging into a really significant move in the crypto world.
Yeah, big acquisition.
Exactly. Coinbase, the big U.S. exchange, largest Bitcoin custodian, over 100 million users, where lots of you probably trade Bitcoin, Ethereum, Solana.
Right.
They've just acquired Deribit.
And Deribit, well, they're basically the world's #1 for crypto options and futures.
Yeah.
Mostly sophisticated traders use them.
Dealing mainly in Bitcoin and Ethereum derivatives, and they offer some pretty serious leverage, right? Like up to 50x.
Up to 50 times, yeah. It's geared towards pros.
So Coinbase buying Deribit, we want to understand the strategy, why now, and what does this actually signal for the whole crypto industry? That's our mission today.
Okay. And I think what's really interesting is seeing Coinbase make this decisive jump into derivatives. That market is just exploding.
It really is. The numbers are kind of staggering when you look at them.
They are.
So this derivatives market, it's seen massive growth. Over the last year, the average daily volume in crypto futures was, about $183 billion?
$183 billion daily.
Which is huge. That's like 3 times bigger than the spot market volume.
Yeah.
Just buying and selling Bitcoin directly.
Exactly. 3 times. And Bitcoin futures alone, that's $107 billion of that daily figure.
So why is this market so, hot right now?
Well, that $183 billion daily volume, it signals things are maturing. You're seeing more institutional players come in.
Ah, okay. The big money.
Yeah, and they're used to derivatives from traditional finance, for hedging, managing risk.
Makes sense.
And the projections, some analysts think annual crypto derivatives trading could hit like $20 trillion by the end of 2025.
Wow, 20 trillion. Okay, so Coinbase is clearly chasing a massive opportunity here.
Absolutely. That's the scale we're talking about.
And it's not just the big Bitcoin futures, right? You mentioned other areas growing too.
Oh, yeah. Specific derivatives are taking off. Look at CME Group's Ether futures. Their average daily volume surged 239%.
239%.
And their micro Ether futures up 165%.
So this acquisition, it really could position Coinbase to be like the global platform for all these crypto derivatives.
That seems to be the plan. And Deribit gives them that instant leadership because, Deribit is the leader, undisputed.
Yeah. Right. Let's talk about Deribit's numbers then. They're pretty impressive on their own.
They really are. In 2024, just last year, their trading volume was over $1.2 trillion.
1.2 trillion.
And that was a 95% increase from the year before. 95% growth for the market leader is significant.
That's wild. And options trading specifically. I heard that jumped even more.
It did. Options saw a 99% leap, hitting $743 billion in 2024. Their last quarter was a record breaker.
Wow. Okay. And what about open interest? It's around $30 billion now.
About $30 billion currently, yeah.
And just to clarify for everyone, open interest is basically the total value of all the active unsettled contracts. Right? It shows how much capital is actually tied up in Deribit's market at any given time.
Exactly. It's a key measure of market activity and depth. So those figures, the volume, the growth, the open interest, they just underline how central Deribit was. They weren't just playing, they were leading the pack.
Which brings us to the price tag. $2.9 billion.
A big number for sure, $2.9 billion.
But how does that stack up, relative to Coinbase itself?
Well, it's roughly 20% of Coinbase's market cap at the moment. So yeah, it's substantial, but when you consider you're buying the dominant player in a market growing nearly 100% year over year, maybe it's actually a pretty good value. You get immediate leadership in a booming sector.
That's a fair point. Paying a premium for the top spot in a high-growth area. And the deal structure itself is interesting too, isn't it? It wasn't all cash.
Right. It was $700 million in cash, plus about 11 million shares of Coinbase stock.
So kind of balancing the immediate payout with tying Deribit's future to Coinbase's success through the stock seems quite strategic.
Precisely. The cash gives immediate value, sure, but the stock aligns everyone. It incentivizes the Deribit team to really integrate and push for that long-term growth within Coinbase. It's a smart way to use their capital, I think.
Okay, so let's sort of wrap this up. The main takeaway here seems to be Coinbase making a really bold strategic play.
Definitely strategic.
Acquiring Deribit catapults them right into the top tier of this massive, fast-growing, and frankly, very lucrative crypto derivatives market. They didn't just buy a player, they bought the player.
They bought the leader, aiming to define the market, not just participate.
So, for you listening, maybe the final thought is this. This whole deal really shines a light on institutional money getting comfortable, even eager, with crypto derivatives.
That's a key trend.
And as these big, sophisticated players pile in, I mean, a $2.9 billion deal shows serious commitment. It makes you wonder, right? How is this going to reshape digital asset trading overall? And maybe more importantly, what new opportunities or perhaps challenges does that create for you as crypto keeps evolving?
Yeah, something definitely to think about. How does this institutional wave change things for individual investors and traders? It's an interesting question for the future.